Now let's quickly check the timeline, guys. Our financial year, the 2020 financial year, I need to emphasize that the 2020 financial year starts on the 1st of March 2019 and it ends on the 28th of Feb 2020. Note that we actually sold this vehicle on the 30th of September 2019, meaning that we've only had it for 7 months. Actually, we've had it for 7 months. When you count, it's 1, 2, 3, 4, 5, 6, 7. So we had it for 7 months in the current financial year. So we've only used it for 7 months. The cost price at the end of the year, it's 1,600,000 rand. It was given in the extract from statement of financial position of the balances that I gave you guys on the 28th of Feb 2020. And the balance at the beginning of the year was 6,400,000 rand. This was given in the tangible assets note. Okay, I didn't give you the cost price of the vehicle that was sold. You have to find the difference, and the difference was going to be 4,800,000. In this case, guys, that is the balance at the beginning of the year. This is the cost price of the asset sold, and that is the balance at the end of the year, all right, which is dealing with vehicles in this case. In your general ledger, you will start with your balance at the beginning of the year on the 1st of March 2019. I have to emphasize this over and over again, guys. I'm doing this for the fourth time now. Actually, it's for the fifth time. So you're going to have this account increases at cost price and it decreases at cost price. In this case, guys, it'll have a balance brought down because it's an asset account. Your balance brought down will be on the debit side. I did explain this, guys, for grade 12. Your assets, especially your tangible assets, will be measured at cost price, will be measured at cost price. Later on, when you go to varsity, they'll be measured at, we have another model which we refer to as the revaluation model. Okay, and then you're gonna have impairments and revaluations and so on. But for now, guys, please remember this is measured at cost price. The balance brought down on the debit side will be 6,400,000 rand. Guys, I realize that some of you love writing what I've just shown you now, where we have 2019 September creators control and so on. If you did not buy any vehicle, don't put that in there. Okay, my last example actually has it's where we trade off. Okay, we trade off a vehicle. So basically, we're giving a business our old vehicle, and they're giving us a new vehicle. And I'll show you guys in the next example that we're going to be doing. I'll probably send it later today, as I've said, or I will probably send it on Monday morning. For now, guys, we sold the asset on the 30th of September. It was recorded in the general journal. The cost price of this asset was 4,800,000 rand, meaning that the remaining assets, guys, will simply be 1,600,000 rand. You total this up, you're gonna get 6,400,000 rand. 6,800,000 rand. I don't know why I got that 800,000 rand. It's supposed to be 6,400,000 rand. In this case, guys, the balance brought down next month will be 1,600,000 rand. Please add them up, guys. It's supposed to be 6,400,000 rand. Now the cost price of the new asset purchase will be there. We bought it for cash or on credit. And then this is the cost price of the asset we sold. Now, guys, let's go to our asset register. I did explain, guys, asset register, it's just a summary of the asset. Basically, it tells you every movement about the asset, every detail about the asset, when it was bought, the registration number, the depreciation method, the depreciation rate, the cost price, so on and so forth. Okay, now I did tell you guys, normally this is used by external auditors, even internal auditors as well. But I told you guys, internal auditors' opinion is biased because they work for the company, they are salaried employees of the company. So basically, whatever opinion they come up with, we cannot trust it as external stakeholders. Now, in this case, we're going to trust the external auditor's opinion, and this is one thing that they're going to check if the asset actually exists, and they will check this register, different assets registers, to check if the assets are not overvalued or undervalued. In most cases, companies will fight to overvalue assets because now that tells them, and that tells external stakeholders that they do have some sort of value. Remember, your value lies on your assets because assets generate income for you. Now, in this case, guys, we're gonna have the 1st of May 2017 as the purchase date, and we're gonna have diminution balance as a depreciation method. We actually sold this on the 30th of September 2019. The depreciation rate is 25%, and the cost price is 4,800,000 rand. As I've said, guys, in the first year, we've only used this asset for 10 months. I repeat, in the first year, we use it for 10 months, and I will keep on counting again, guys, okay? 2018 financial year ends on the 28th of February 2018. It starts on the 1st of March 2017. So we bought this asset on the 1st of May of that year. So it's May, June. I'm including May because it was on the 1st. So I used this asset. Remember, guys, we depreciate the asset for as long as we are using it. I used this asset for the entire month of May. So I'm going to count May, June, July, August, September, October, November, December, January, February. How many fingers are up? It's all your fingers, guys. Okay, so we've used it for 10 months. And don't be afraid to use your fingers in the exam, guys. I've seen physics guys do weird things with their fingers in exams. So please don't feel ashamed to use your fingers. Okay, in this case, guys, when you multiply that by 25%, multiply by 10 over 12, it'll give you 1,000,000 rand, and then you'll get 1,000,000 rand. This goes out. Milena, I realized that you corrected that mistake that I notified you about. Guys, please note that when you calculate the carrying value, you're going to always take the cost price minus your accumulated depreciation. 4,800,000 rand minus 1,000,000 rand will give you 3,800,000 rand. Meaning that when you calculate depreciation for the next month, guys, you're going to use 3,800,000 rand multiplied by 25%. Okay, that is because we are depreciating on diminution balance. Remember, guys, diminution balance method is the same as the book value method, is the same as the carrying value method. Okay, don't be confused when I put in depreciation method, carrying value, book value. You should be able to know what I mean by that. Now, guys, here we're going to have a current depreciation of 950 for the 2019 financial year. Please note that the 2019 financial year starts on the 1st of March 2018. So we've used this vehicle for the whole year, for the whole 2019 financial year. Accumulated depreciation will be 1 million plus 950. That will be 1,000,000 and 950. Carrying value, guys, will simply be 4,800,000 minus 1,950,000, and it'll give you 2,850,000. There's another way of getting that 2,850,000, but I'm scared to use it because now you guys will end up making mistakes. I'll just do it anyway. You will just take this, and then you just minus that, and then it'll give you that. Otherwise, you take that and you minus this, and it'll give you that. So you basically have two methods of calculating carrying value. And then we're going to have on the 30th of October 2018, actually in this case it's supposed to be September. September 2018, we sold this vehicle, guys, okay? And I did say, guys, the 2020, I mean, it's not supposed to be 2018, it's supposed to be 2019. The 2020 financial year starts on the 1st of March 2019. It ends on the 28th of Feb 2020. 20. So when we count, guys, this asset, for how long have we used this asset? It was there on the 1st of March 2019. So it will be March, April, May, June, July, August, September. How many fingers are up? At 7 months. So in the current year, we've only had this asset for 7 months, which is from the beginning of the year until the 30th of September 2019. That's why I'm going to take the carrying value of 2,850 multiplied by 25%, multiplied by 7 over 12, and that will give you 415,625. Accumulated depreciation will be 1,950,000 plus 415,625, and then it will give me 2,365,625. My carrying value, I will simply take 4,800,000 minus 2,365,625, and then it will give me my carrying value of 2,434,375.